So it's Adil Fazal bringing you a review of European markets at the market close for this today's session, which is Thursday the 19th of November 2015. This video is being brought to you by CFDs.com. Be sure to visit the website. They are the leading specialist, or they are the specialist spread betting and CFD brokerage. You can certainly qualify for a bonus up to 25%. Alternatively, if you do open an account, please do send me an email and I'll get that applied for you, the bonus that I'm referring to. Also, alternatively, you can visit the educational website where I constantly update my charts and analysis throughout the day. Okay, let's try and decipher exactly what's happened today. In terms of the actual markets themselves, we have had the short squeeze continue to a large extent. Let's just try and decipher this. Okay, so FTSE 100 closes up higher, 0.8%. The DAX, very impressive, almost a percentage. And the CAC is languishing, as we already know why, due to the terrorism fears, etc., etc. The Euro stocks itself certainly did close weak towards the close. They all attempted to close the gap as the Euro rallied. So the highlights today in terms of the markets themselves, we had the Asian market quite a stellar move higher overnight. Obviously that triggered the obviously short squeeze early on, along with the obviously US markets overnight too. Not only that, we also had a cut in the SLF in China in terms of obviously providing easier liquidity, and that was obviously a short squeeze catalyst too. Now, the bearish side of the bearish argument was the fact that the FOMC minutes were hawkish, but not as hawkish as everybody expected. Okay, the other argument as well was the BOJ with no additional QE. Also, with regards to the ECB minutes, they weren't as hawkish, or should we say, they weren't as dovish as everybody expected. So again, another bearish argument. So we've had quite an interesting 24 hours. I mean, we've had Mr. Mester, Mr. Lockhart, also just now, I think in the last 10-15 minutes, with further hawkish comments. Okay, so in terms of the European markets, in terms of earnings, we have the ThyssenKrupp, which was raised its dividend, and that certainly helped the markets higher. In terms of the FTSE, it was led by Johnson Matthey, and that certainly propelled the FTSE 100 higher today. And obviously we had weaker retail sales out from the UK, and also we had CBI data that was certainly weaker as well. US jobs today, jobless claims certainly higher than expected, so therefore weaker. We had Royal Mail that came out stronger than expected. Well, the results were actually poor, to be honest, but the interpretation of them was obviously bullish, and that sent the stock or the share price higher to a large extent. So I think the overriding feature here, or overriding in Europe really, is the fact that the euro has rallied up to almost 1.075. Okay, it broke the 1.07 handle again, and therefore that's considered to be risk off given the anti-QE trade, or the QE trade going into reverse. Now, we've had no additional BOJ or no easing from the BOJ, so that certainly is considered to be bearish, and that will certainly hurt US markets overnight. Now, I'll give you an insight into the US markets as we're trading right now. It's currently 6:40 p.m. Just almost 2 hours since the European markets closed, and let's just show you an insight into the actual US markets. Now, the Nasdaq is at the fib 75% resistance. The weekly chart is an inside bar, so therefore it's bearish. Okay, bears certainly have control here. 60 minutes is obviously holding resistance, as we can see here, at the 4677 level, and we are struggling to obviously push higher. The 10-minute chart on the Nasdaq, we haven't made a new high, but obviously we are holding that resistance zone at the 4680 level. So it's all about this level here at 4670 to get cracked and broken, and then obviously you can certainly expect the rally to certainly the sell-off to ensue. Now we have the unfilled gap below at 4565, so certainly remain open to that. Okay, in terms of the S&P 500, give you an insight there as well. We are at the fib 61%, and we are holding that very well, and therefore a risk-off scenario. The 60-minute chart certainly is holding this key level at 2088, which I did explain last night. 2086, 2087, 2088. These were the levels to watch out for if you see my video yesterday, and I did explain that that would certainly hold as resistance going into today, and that's exactly what's been the case thus far. Okay, so also if you look at the shares of, or if you look at the index known as the Russell 2000, you'll see that there's certainly a weakness there too. So the weakness certainly seems to be permeated throughout the markets, and the Dow is certainly into resistance, etc., etc. Okay, now let's try and break down the European markets to see exactly where we are trading from there. Daily chart, we can see here we've put in a topping tail or a doji candle, so therefore indicating resistance, and that 200 MA is certainly holding with no additional catalyst to propel the European markets higher. Again, bear in mind we have terrorism concerns, okay, and the minutes, or the ECB minutes today were not as dovish as everybody expected, okay, and even having said that as well, a lot of the dovish minutes have certainly been factored in, given the fact that we've had this stellar rally from 3,330 all the way up to 3,470 on the Euro stocks. Very impressive rally, and given the fact that we've negated the whole terrorism concerns altogether. The 60-minute chart, you can see in the Euro stocks, certainly that wall of resistance at 3,475 remains, and that should hold the Euro stocks at bay. Now we have the unfilled gap that needs to close at 3,430, so don't be surprised if that certainly gets closed today. That's what I'm expecting as well. We should go into Friday, given the fact that it's Thursday, going into Friday, terrorism concerns and the uncertainty and the fear and so on and so forth in the market. Going into the weekend, we should see a risk-off tone going into Friday. Definitely, that's my interpretation thus far. Now, the German DAX itself. Let's bring up the German DAX. Now, on the daily chart, German DAX putting a doji and a topping tail at the 200 MA, so that certainly is indicating weakness. The weekly chart did actually break above the key diagonal trend line, but it's a matter of time, or it's going to be interesting to see whether or not we can sustain and we can hold that a move higher, whether or not that will end up as a topping tail. And given the fact, like I said, we're going into the weekend, the terrorism concerns and the uncertainty and so on and so forth will certainly bring out the bears. Okay, so 60-minute chart of the German DAX, we are holding previous resistance equal support just about. Given the fact that we've rallied in the euro above 1.075 is already indicating a risk being taken off, or risk aversion for my interpretation of the markets, and we are looking to close this gap on the German DAX at 10,960. Okay, on the daily chart there is a gap on the German DAX at 11,290, but that needs a sustained move in the euro lower or stronger economic data, and it's very unlikely and very hard to get either thus far. Even with Lockhart's comments, the euro has failed to fall, and that generally means that euro strength, or i.e. the QE trade is being reversed, and that's going to see weakness in European equities. Again, the German DAX, we did push out and make a high, and then obviously we failed, and now it looks like we're making lower lows and lower highs, and like I said, the target remains gap fill on the German DAX. Okay, now if we cross-reference the German DAX with the mid 60, you can see that we also put in a doji here. Okay, so again, this is a key resistance zone on the German DAX, and you are looking at weakness again. Okay, with regards to the German DAX. Let me just get rid of these pivot points because you can't see properly. Okay, so certainly resistance. Now there is obviously an unfilled gap below, so again the gap filled or gap trade is certainly open, and there's multiple gaps below, and like I said, we are into this risk off zone and a risk off scenario. Again, that gap level here certainly is holding as resistance, or previous resistance equals support is certainly holding on the MDAX. The tech the MDAX, sorry, MDAX here we go. Okay, so the MDAX is daily chart. You have a topping tail again. Let me just get rid of this pivot point's annoying. Okay, so topping tail on the MDAX, so again signaling a potential top on the German DAX, and therefore you are looking for weakness going into tomorrow. So nothing confirming a rally on the German DAX at all. Okay, if anything, it's indicating a topping pattern, which obviously means a topping pattern for US markets. Okay, tech all share again certainly weak, as you can see, no higher highs, and indicating weakness again. Okay, looking for potential a potential sell-off. Okay, let's just see what's happening here. Okay, so again, tech all share, you can see a topping tail holding resistance, and therefore you are looking for weakness in the German DAX and obviously the Nasdaq as well, given the fact that they are both intertwined. Okay, so German DAX certainly expecting weakness, therefore given the fact that that's a bellwether, you are expecting weakness in the rest of the markets as well. I've showed you the CAC MIG 60, also the volatility index on the Euro stocks is certainly starting to pick up. With regards to the CAC itself, you are again indicating or seeing weakness. No strength as such as the DAX or the Euro stocks, but certainly weakness here nonetheless. Okay, so we've actually closed the gap on the French CAC, and that's showing its weakness to you, and you are looking at potentially further moves lower with the unfilled gap below that remains open again. So certainly vulnerable, more vulnerable than the other indices, so as the French CAC will certainly be the first one to show. The FTSE 100, the weekly chart again is an inside bar on that red candle. We have this key diagonal trend line, lower lows, lower highs, and the bears certainly remain in control until that's taken out. The daily chart, we put in a potential topping tail at the fib 75%. Given the fact that we had weaker, obviously, retail sales today, weaker CBI, and generally we had weaker Chinese data overnight, weaker import data as well from Japan. Certainly is a concern, and no additional QE either. This doesn't bode well going forward. Okay, so that fib 75 to 61% on the FTSE 100 has certainly held. Now, a 60-minute chart is in no man's land. No real concerted effort here in terms of any direction. Okay, the only thing that we can potentially think of is that you do have a resistance zone in this area of 6340, 6330, etc. And that will certainly act as resistance going forward. The 10-minute chart of the FTSE 100, we certainly lost the lackluster as we obviously short squeeze as high as 6366 before we started to reverse. And the 6340 level certainly looks like a potentially lower high. And the next move you are looking at is going to be 6280. Okay, so that's the one that we're going to test in terms of the FTSE 100. Okay, now in terms of commodities, copper still remains weak. Can't catch a bid. Gold itself, we did attempt to rally, but obviously we've sold off on Lockhart's comments being obviously hawkish. And the oil price certainly again, or should I say the dollar itself, is finding support on the dollar index. So you are looking at a potential thrust higher on the dollar index, given the fact that we are into gap fill now on the dollar. And you are looking at, given the fact that you got hawkish comments, etc., you have an unfilled gap above to certainly fill. And the rally in the actual Aussie and the Kiwi certainly are coming to an end. Okay. And also, if you are seeing strength in the dollar, then obviously then commodities are into weakness, and therefore the FTSE will certainly be one of the first indices to certainly get hit. Okay, I think that's a wrap. Before I finish, remember the Euro USD, we are putting in a doji on a weekly basis, so certainly a potential pivot to low, and therefore you are looking at weakness in European equities. Bearish flag on the verge of, bearish channel on the verge of breaking out. The 4-hour chart certainly depicts that, as you can see, falling contracting wedge breakout, and therefore you are looking at bullish price action. Again, you have higher highs and higher lows, and we are retesting this level here. Previous resistance equals support, and you are looking for further weakness on the euro after lower lows, lower highs have been broken. Strength in the euro generally means weakness in European equities, and that's exactly what's going to occur with obviously US markets now into firm resistance. So therefore, overall, my bias certainly remains short, especially on the FTSE 100. Okay, and also the European equities as well, to a large extent, given the fact that they will have the weakness obviously from the US and Asian markets as well. One more thing, I think I should just show you the Shanghai. The Shanghai is still holding that fib 75% resistance, no real move higher, and therefore you are expecting weakness. The Nikkei itself has closed that gap, or more or less closed that gap, and therefore you are looking for further weakness on the Nikkei. So certainly a topping out in the Asian indices, and therefore you are looking for further weakness in US and European indices. Okay folks, I think I best finally finish this video. Be sure to visit cfds.com for your trading needs. Goodbye now.